So the Fed just announced about an hour ago that they have made a decision at this month's meeting to indeed cut interest rates. Now, this cut was highly anticipated, and they even cut as much as the market was anticipating, exactly 1/4 of a percentage point, or 25 basis points, which, of course, the market and the equity market certainly had already priced in long ago. So essentially what the Fed today did was pretty much a neutral action. They didn't, had they, for example, not cut at all, it would have been sort of an implicit hike, because then the market, which had priced in a cut, would have had to adjust to the fact that there wasn't a cut, and prices would have, equity prices certainly would have to fall. And of course, if they had cut more than 25 basis points, let's say 50 basis points, which was something that was considered a potential possibility, though a small possibility relative to a 25 basis point cut, that would have probably had led to a strong upside adjustment in equity prices. But of course, despite cutting exactly and doing exactly as the market anticipated, Jerome Powell managed to turn his hike, or his rate cut, into something that was actually bearish for stocks. Powell and the Fed folks came out and they made it absolutely clear that this is not the beginning of an easing cycle, meaning that the Fed is not going to be cutting from now on a regular basis until we get back to 0%, where we were a few years ago. This cut is more or less a one-off thing. It is what they're calling a mid-cycle adjustment. So this is not what they would call the start of a new trend, the start of an easing trend. Rates are not going to trend downward from here, but rather this is a blip. And of course, upon hearing that, the algos very quickly sold off quite a bit of stocks, and the stock market plunged at the lows, I believe, about 2%, all three major indexes. Because Powell was supposed to be very dovish today. He was supposed to have a dovish cut, but somehow he managed to come out with a hawkish cut. The Fed keeps doing this, to where they try and mask their actions with words that seem to contradict their actions. Like a couple months ago, we had what was called the dovish hike. Where the Fed raised interest rates, but they said, you know what, it looks like rates are getting a little too high. We may stop raising after this. So that was a dovish hike. So they're hedging their bets essentially by acting, in that case, acting very hawkish, but speaking very dovish. In this case, they're hedging their bets by acting dovish and speaking in a manner that's quite hawkish. Powell reiterated that he thinks there's absolutely nothing wrong with the U.S. economy. He thinks everything's going just fine. There's no weakness anywhere. He doesn't see any bubbles. He doesn't see any financial distress. He thinks that household debt is absolutely fine. He thinks that corporate debt could be a problem if there was a recession, but there's not going to be a recession, so that doesn't matter. He thinks we're living in a world of sunshine and rainbows. And this is the exact opposite of what the equity markets wanted to hear, because right now, for quite a while, now that trade talk optimism has fizzled away, now that trade talks between the U.S. and China are as dead as I always thought they were, when at this point when all hope is lost, the markets have been living off of fumes generated by Powell's big fat mouth. And now he's gone and sucked all the air out of the room. The market wanted Powell to be quite dovish, and in fact, it probably would have been bullish for stocks had Powell alluded to the possibility of a recession in the fall. Something that I think is still a possibility at this point. Frankly, the way that Powell's talking, I almost think that he's trying to lose his job, because I'm sure the President of the United States is not going to be very happy with this result from the Fed. Somehow Powell managed to cut rates and actually make stocks go down. Now, of course, there's also the possibility that this was a buy the rumor, sell the fact event. And so perhaps unless Powell would have cut 50 basis points, then maybe stocks were going to go down either way, because stocks really have been rallying on this hope that Powell was going to cut 25 basis points. And so now that he's done it, there's no more hope left. That was the last thing that the markets were waiting for. That was the last thing they had to look forward to. And now there's nothing to look forward to unless Powell signaled that there were significantly more rate cuts to come. Then perhaps he would have been able to stave off the sell-off. But again, this is the problem that Powell's going to run into, even if he gets into a full easing cycle, which he says he's not going to do, but I think he absolutely is, because the data is going to continue to worsen. The stocks have nothing to go off of unless Powell, except for this easing. And of course, once the Fed gets down to the zero lower bound, once they keep giving the markets that rate cut that it's craving every couple months, once they get down to the zero lower bound, they're going to have nothing left to cut, and then the markets are going to really sell off because they have nothing to look forward to unless the Fed promises negative rates. And this is, of course, the road that we've gone down in Europe and Japan. That's why those places have stagnated so much. Europe and Japan really don't grow, not like the United States has, and the United States hasn't grown much, since the 2008 recession. But at least we have some growth. But I think that's really slowing down. We've got all this underbrush building up in the U.S. economy, all this debt that the Fed won't let, go bankrupt and go belly up and burn off. It's kind of like when you have a forest that hasn't been burned in a few decades. You get all that nasty underbrush, all that debris that is just kindling, waiting for a spark. But you've got these firefighters everywhere putting out every little brush fire. That just keeps letting more and more of this stuff build up and choking all the healthy growth of the forest. But of course, the end result is then when the firefighters are not able to keep putting out these small brush fires, and one gets big enough that it's out of control to them, it'll burn hotter than had they just let it burn any of the previous times that it had caught fire. That's the Fed's problem here. They're afraid to let the stock market burn. Powell is bluffing when he speaks hawkish, or at least somewhat hawkish by Fed standards in these conferences. I don't believe a word of what he says. He may believe what he's saying, but he's buying into his own nonsense. A few months ago, he said that in January, I think he said that he doesn't see any chance of a recession anytime soon. And of course, if he didn't see that chance now, he wouldn't be cutting rates by 25 basis points. There'd be no reason to. In fact, he would still be hiking. Now, when pushed, Powell did admit that he's not saying that this will be the only rate cut in this series. He said that there may be more to come, and they're not ruling that out. But he's saying that this is not going to be a long trend. They're not going back to the zero lower bound, was his point. He's saying there may be some cuts, but this is not the cutting cycle. He doesn't consider this to be the end of the business cycle. However, once stocks start to slip and you see household net worth start to decline, the cycle will be over pretty quickly, because that's what's been driving consumption, which, as Powell pointed out, is over 70% of the economy. Powell's said his number one goal is to sustain the expansion, and he's trying his darndest. I'll give it to him. He certainly seems to be acting like that is his goal, just to kick the can down the road for longer and longer. But the longer he does that, the more it's going to hurt when the cycle finally comes crashing down, which I don't think is that far off now. I think that Powell's hawkishness today will trigger a bit of a sell-off in the stock market, which will lead the Fed to probably backtrack on everything Powell said, to sound more dovish, to try and get stocks back up, try and get the S&P back around 3,000, and we'll inevitably see another cut at the next Fed meeting, I'd have to imagine. We'll probably see another cut in September, and who knows if the S&P will still be at 3,000. Currently the S&P was just bouncing up against a major long-run resistance, and now it looks like that retest has failed, at least as of today, thanks to Jerome Powell. So I don't see, technically speaking, I'm not a technician, but I try and follow some good technical guys to understand this stuff. The technical guys, I don't seem to think that the market is that the charts are particularly bullish at this point after today. So I'll leave you with that, and if you gained anything of value out of this video, I'd appreciate you clicking that like button and subscribing. And if you do subscribe, please do click the bell, because I do upload every day, and I'd hate to have you miss one. So I'll see you folks back here tomorrow.